the notes you shared with us is stagflation risk is real.
Yeah, it's what happens when you combine the outlook for secular stagnation with what happens if transitory really fails to be transitory. Secular stagnation return on the growth side, coupled with more persistent signs of inflation, equals stagflation. It's not necessarily our outlook, but it's certainly the risk that we're talking a lot more about, and it's a type of regime the markets have not faced in a generation. So it's really something that we have to pay attention to.
Hey guys, welcome to Market Uncharted. In today's video we are going to talk about a really crucial and important topic at this moment, stagflation. First we will discuss what is stagflation, why it's bad, and some ways that us as investors can take a look around and make some money out of it. Also a small example of the 1970s United States, where for example gold took off. So let's start. Stagflation is characterized by slow economic growth and relatively high unemployment, or economic stagnation, which is at the same time accompanied by rising prices, i.e. inflations, or in this case, more money being flooded into the market. Stagflation can be alternatively defined as a period of inflation combined with a decline of the gross domestic product, i.e. GDP. If you can see what's going on nowadays in our markets and our economies, is exactly that. After the opening of our economies, after the cerveza sickness shutdowns, we saw an economic boom. But since then, we could see from China, also Europe and the United States, that the economies are slowing down. On the other hand, we saw many rising inflation, especially in the United States, which is already above 6%. Unemployment rate is rising as well, while weak demand, and don't forget this unemployment, it's self-fulfilling in the sense that people are putting themselves out of the working market because they are okay with what's going on. Governments are making stimulus checks, and therefore there is no incentivization for people to work any longer. But let's continue to see stagflation as a contradiction, as a slow economic growth would likely lead to an increase in unemployment but should not result in rising prices. The only difference this time is that with the amount of money flooding the markets, that's why you see as a consequence rising prices. Therefore, this phenomenon is considered bad. An increase in the unemployment level results in a decrease in the consumer spending power. If you take on runaway inflation, that means that what many consumers do have is losing value as time goes by. An example, if you look at the United States or Europe, the inflation rate is around 4 to 5%. That means that on an early basis, you are losing your purchase power more than 5%. In order to combat this type of inflation, you need to invest your money and get at least 5% return to maintain your purchasing power. And how to invest? This is really important because we have few examples in the past where investing in physical assets such as gold, silver, platinum, also the housing market, everything that is physical that the investor can see, it's a way to protect yourself from inflation. Nowadays, we have other ways of investing. We have also ETFs. I present here a few examples. Don't forget, guys, this is not financial advice. This is just a way for you to know what's out there. You either can go to miners, you also can go to physical ETFs. The point being that if you invest in this type of commodities and precious metals, in the long run, you will protect your purchasing power. Just a few key takeaways before we end up this video. Stagflation refers to an economy that is experiencing a simultaneous increase in inflation and stagnation of economic output. Stagflation was first recognized during the 70s. If you take a small look at this period of time, this decade, you'd see that gold outperformed the housing market, the financial markets. The prevailing economic theory at the time could not easily explain how stagflation could occur. This was the first time, especially in the United States, that we felt it. Since the 70s, rising price levels during periods of slow or negative economic growth have become somewhat of the norm rather than an exceptional situation. But now we are losing a little bit out of hand. Inflation is way above our governments and central banks' targets. So thank you guys so much for watching this video. Never forget, knowledge is not power, knowledge is potential power, execution is everything. And just like the markets, we will not rest.